Hey, crypto fans, and welcome back to the Crypto Podcast.
It's time for another deep dive.
You got another deep dive into the crypto markets,
And this time we're looking at February 2025.
specifically the last week of February.
Yeah, that was a pretty wild week.
Definitely a roller coaster.
We saw some pretty big drops.
We did, and we're going to focus on three of the biggest players today.
The big three: Bitcoin, Ethereum, and Ripple.
We'll be using analysis by FX Street and their expert Manesh Chetri.
He does some really great work.
Absolutely. So listeners, get ready for some fascinating insights.
Oh yeah, we've got some surprising facts.
And hopefully some aha moments.
Always love those aha moments.
All right, so let's set the scene.
Okay.
Paint us a picture of the crypto market in February.
Well, February was not a good month for crypto.
It wasn't a good month for anybody.
No, it wasn't.
Things are down across the board.
Down.
So how bad was it really?
Well, we saw some double-digit drops.
Double digits, yikes.
Yeah, in the week leading up to February 28th, Bitcoin was down 15%. 15%? Oh, man. Ethereum took an even bigger hit, down 24%.
24%.
And Ripple fell 21%.
So all three down more than 20%.
Essentially.
Yeah. Okay, so let's zoom in on Bitcoin first.
All right.
It started the month pretty strong, right?
Yeah, it was actually looking good for a while there.
Consolidating between $94,000 and $100,000.
Yeah, looking like it might break through that $100,000 ceiling.
But then things took a turn.
They did.
So when did things start to go south?
Well, the first warning sign was when it dipped below $94,000. Then on Monday, February 27th, things really started to unravel.
That Monday was brutal.
It was Bitcoin closed at $91,552.
Ouch.
And by the end of the month, it was trading around $81,000.
So from potential $100,000 to just $81,000.
Yeah, it was a rough couple of weeks.
What happens if this downtrend continues?
Well, if it keeps going down, that $73,000 support level is going to be a major test.
$73,000.
Yeah.
That number sounds familiar.
Does it?
Yeah. Wasn't there something significant about that price level in the past?
You have a good memory. It does ring a bell, doesn't it?
Like a historical echo or something?
Exactly. The last time Bitcoin dipped that low was back in early 2024.
Early 2024, what happened then?
Well, that's when we saw that huge influx of institutional investors.
Oh, right.
Remember, they started pouring money into Bitcoin right around that $73,000 price point.
And that fueled a massive rally.
It did. It was a major turning point.
So that $73,000 level is loaded with history.
Yeah, it holds a lot of weight for investors.
It's amazing how certain price levels become these psychological anchors.
They really do. It's all about market psychology.
But let's move on to Ethereum.
Okay, Ethereum.
It also had a rough February.
It did, very similar to Bitcoin, but with its own nuances.
So walk us through it.
Well, Ethereum actually tested a low of $2,125 pretty early in the month.
Early February, wow.
Yeah, around February 3rd, it was an early sign of trouble.
A sign of things to come.
Unfortunately, by the end of the month, it was right back down there, retesting that same low.
So it rallied for a bit in the middle.
It did, which gave some hope to the bulls, but ultimately the bears won out.
And if it breaks below $2,125.
Then we could see it heading towards $1,905.
Okay, so Bitcoin is teetering on $73,000, and Ethereum is clinging to $2,125.
Yeah, those are the key levels to watch right now.
And of course, we can't forget about Ripple.
No, Ripple had a rough February as well.
It did tell us about it.
Well, that fateful Monday, February 27th, really hit Ripple hard.
It was a bloodbath.
It plummeted almost 12%, hitting a daily low of $2.06 on Tuesday.
$2.06, ouch.
And by the end of the month, it was hovering around $2.03.
So just above that $2 mark?
Barely.
And if it breaks below there?
If it breaks below $1.96, we could see it slide down to $1.77.
$1.77. That was its low point back on February 3rd.
Exactly.
It's like that first week of February really set the tone for the whole month.
It did. It was a rough start that the market just couldn't shake off.
And now all three of our cryptos are kind of teetering on the edge.
They are. It's a nail-biting time for investors.
Okay, so this is where things get even more interesting.
Oh,
Let's talk about the relative strength index.
the RSI.
Don't worry, folks. We'll explain it in a way that even your grandma can understand.
We'll keep it simple.
So what does the RSI tell us about Bitcoin, Ethereum, and Ripple's performance in February?
Well, the RSI is basically a momentum indicator.
Momentum indicator.
It tells us if a coin has been overbought or oversold.
Overbought, oversold. I think I'm starting to get it.
When the RSI is above 70, it means the coin has been overbought, meaning it's gone up too fast and might be due for a correction.
Okay, that makes sense.
And when the RSI is below 30, it's a signal that the coin has been oversold.
Oversold.
Meaning it's dropped so much that it might be due for a bounce back.
Ah, So a low RSI could be a good thing.
It could be. It suggests that the selling pressure might be easing up.
So what was the RSI looking like for our big three at the end of February?
Well, guess what? All three, Bitcoin, Ethereum, and Ripple, had RSI readings below 30.
Below 30. So they were all oversold.
They were all flashing that oversold signal.
Ooh, that sounds like a potential glimmer of hope.
It could be, but we have to be cautious.
Why is that?
Well, an oversold RSI doesn't always mean a reversal is imminent.
It doesn't.
No. Sometimes oversold conditions can persist and the price keeps drifting lower.
So it's not a guaranteed buy signal.
Exactly. It's just one piece of the puzzle.
One piece of the puzzle.
We need to look at other factors as well, like market sentiment, news events, and the overall macroeconomic environment.
Right, because the crypto market doesn't exist in a vacuum.
It's connected to everything else that's happening in the world.
It's all interconnected.
Exactly, and that's what makes it so fascinating and challenging at the same time.
Speaking of interconnectedness, remember that NVIDIA earnings report?
Oh yeah, that was interesting.
It shows how events outside the crypto world can have a big impact.
They certainly can. That's why it's so important to stay informed.
Absolutely. But before we get too deep into those external factors, let's take a quick break.
That was good.
For those of you just joining the crypto journey, be sure to check out our crypto podcast channel.
We've got tons of resources and deep dives to help you navigate this exciting world.
We'll be right back with more crypto insights after a quick word from our sponsors.
See you in a bit. Welcome back to the deep dive.
All right, so we're back and ready to dive deeper into those February free falls.
Let's do it.
We talked about Bitcoin, Ethereum, and Ripple all taking a hit.
Yeah, they all ended the month in the red.
And we touched on some key support levels.
Those are crucial.
So let's unpack those a bit more and see if we can get a clearer picture.
Okay, sounds good.
Let's start with Bitcoin again.
All right, Bitcoin.
It spent a good chunk of February bouncing between 94,000 and 100,000.
It did.
What happens if it manages to stage a recovery?
Well, if it can break above that $100,000 ceiling, that would be a really positive sign.
A sign that the bulls are back in control.
Exactly. It would signal a shift in momentum.
But if the downtrend continues,
Then that $73,000 support level we talked about becomes even more critical.
that $73,000 level, it feels like a historical battleground.
It does, doesn't it?
Like the bulls and bears have clashed there before.
Many times.
And it's not just about the price itself.
You know, it's about the psychology surrounding it.
The psychology.
Yeah, think about it. The last time Bitcoin tested $73,000, it triggered a wave of buying.
Because investors remembered what happened before.
Exactly. They had faith in that level.
So it became a self-fulfilling prophecy.
In a way, yes. If enough investors believe a support level will hold, their buying activity can actually make it hold.
Wow, that's powerful.
It is. But the opposite is also true. If enough people panic and sell, that support can crumble.
It's like a game of chicken between the bulls and the bears.
You could say that.
Okay, so Bitcoin's fate hangs in the balance.
It does for now.
What about Ethereum? What does the technical outlook look like for ETH?
Well, Ethereum is currently dancing around that $2,125 low from earlier in the month.
The one it hit back on February 3rd.
Yep.
If it manages to hold that line, is that a good sign?
It would be a very good sign.
What could happen then?
Well, we might see it rebound towards its previous resistance level, which is now acting as support around $2,359.
So $2,125 is the magic number.
You got it. If it holds above there, we could see a nice bounce.
And if it breaks below?
Then we're looking at a potential dip towards $1,125.
Okay, so $2,125 is the fork in the road for Ethereum.
One path leads to recovery, the other to further decline.
All right, last but not least, let's talk about Ripple. What's the technical outlook for XRP?
Ripple is hanging on for dear life above that $1.96 support level.
The one it briefly dipped below on February 3rd.
Yeah, but it quickly bounced back.
So that's a good sign, right?
It is. If it can stay above $1.96, we might see it rally back up towards $2.72.
$2.72, that'd be a nice recovery.
It would, but if it breaks below $1.96, well, then that $1.77 low from earlier this month could be back in play.
Okay, so we've got these key support levels for all three. $73,000 for Bitcoin, $2,125 for Ethereum, and $1.96 for Ripple.
Those are the levels to watch.
It's like a game of limbo. How low can they go before bouncing back?
Exactly. It's a test of strength for the bulls.
You know, I'm finding this whole technical analysis thing pretty addictive.
Really?
Yeah, it's like a puzzle trying to decipher the market's secret language.
It is fascinating, isn't it?
It is, but it's also important to remember that technical analysis is just one piece of the puzzle.
You're absolutely right.
It's like looking at a map, but forgetting about the weather conditions.
I like that analogy.
We also need to factor in market sentiment, news events, and the overall macroeconomic landscape.
Those things can have a huge impact on price movements.
So it's not just about the charts and numbers.
No, it's also about the stories and emotions that drive the market.
Speaking of stories, we can't forget about those external factors lurking out there.
True.
Remember how NVIDIA's earnings report sent ripples through the crypto world?
That was a great example of how seemingly unrelated events can have a domino effect.
It shows how interconnected everything really is.
The crypto market doesn't exist in a vacuum.
It's all part of a bigger picture. You know, this deep dive is really opening my eyes to the complexities of the crypto market.
It is complex, but that's what makes it so interesting.
It's not just about buying low and selling high.
No, it's about understanding the technology, the economics, and the psychology behind it all.
It's about the big picture.
You got it.
And we're back for the final stretch of our February crypto deep dive.
It's been quite a journey, hasn't it?
It has. We've seen dramatic price drops, explored oversold conditions, and even touched on the world of crypto AI tokens.
We've covered a lot of ground.
We have, and let's not forget those crucial support levels. We're all watching $73,000 for Bitcoin, $2,125 for Ethereum, and 1.96 for Ripple.
Yeah, those are the key levels to keep an eye on.
It feels like we're at a crossroads waiting to see which path the market will choose.
You could say that March is going to be a pivotal month.
It will. And while those technical indicators give us some clues, we also need to remember that external factors can play a huge role.
Oh, absolutely.
As we saw with NVIDIA's earnings report, events outside the crypto world can send shockwaves through the market.
It's a reminder that crypto is not an island.
Right, it's all interconnected.
Exactly what happens in the global economy and tech and geopolitics, it all affects crypto.
It's like a chain reaction. One event triggers another, and the whole market feels the impact.
That's a great way to put it.
So we need to stay informed and keep our finger on the pulse of what's happening in the world beyond crypto.
Agreed. Knowledge is power, especially in a volatile market like this.
You know, one thing that struck me throughout this deep dive is that even when the market takes a hit like it did in February, there's still this underlying sense of optimism in the crypto community.
I've noticed that too. It's like a belief that this technology, this movement, is bigger than any short-term price fluctuations.
It's like this unshakable faith in the future of crypto.
Exactly. It's a long-term vision.
But let's be real, those February price drops were significant.
They were, no doubt about it.
What do you think were some of the key factors that contributed to this downturn?
Well, it's always hard to pinpoint a single cause for market movements. It's usually a combination of factors.
Right, it's multifaceted.
Exactly. One possibility is profit-taking. You know, the crypto market experienced some incredible gains in 2024.
It did. It was a phenomenal year.
So it's natural for some investors to cash out, especially when they sense uncertainty on the horizon.
Especially after such a strong bull run.
Makes sense. When prices rise so high, there's always a risk of a pullback as people take profits.
It's like the law of gravity, what goes up must come down.
Pretty much, but it's not always that simple.
What other factors might have played a role?
Well, regulatory concerns are always a factor. Governments around the world are still figuring out how to regulate cryptocurrencies.
It's a constantly evolving landscape.
It is, and any hint of stricter regulations can spook investors and lead to sell-offs.
Because regulation often brings uncertainty.
Exactly, and uncertainty is kryptonite for the markets.
We also can't discount the impact of overall market sentiment.
No sentiment is a powerful force.
When fear and uncertainty grip the markets, investors tend to flock to safer assets.
They seek refuge in what they perceive as less risky.
And crypto, with its inherent volatility, can suffer as a result.
It can't. It's definitely not for the faint of heart.
So it was a complex interplay of forces, profit-taking, regulatory anxieties, and shifting market sentiment, all contributing to this February downturn.
That's a great summary.
It's like a detective novel trying to piece together the clues and uncover the real story behind those price drops.
And the mystery continues.
It does. But I think we've uncovered some valuable insights along the way.
I agree. This deep dive has been very enlightening.
You know, one thing that really struck me is that even though February was a rough month, there were still some bright spots.
Oh, definitely.
The whole crypto AI token surge triggered by NVIDIA's earnings, that was pretty exciting.
It showed that innovation and disruption are still driving forces in the crypto space.
Exactly. And it reminded us that even in a bear market, there are opportunities for growth.
Opportunities abound for those who are willing to look for them.
Well, we've covered a lot of ground in this deep dive. Explored the highs and lows of February 2025, dissected technical indicators, and pondered the impact of external factors. Any final thoughts?
Yeah, I think the biggest takeaway is that The crypto market is complex and ever-evolving. It's influenced by so many factors, both within and outside the crypto world.
And that while price movements can be unpredictable, understanding the underlying trends and forces at play can help us navigate this exciting space with more confidence.
That's a great way to sum it up.
So it's about embracing the complexity, staying informed, and never losing sight of the transformative potential of this technology.
Absolutely.
And on that note, I want to remind everyone that this is just the beginning of our crypto journey. For those of you who are hungry for more insights, analysis, and deep dives into the crypto world, be sure to visit our crypto podcast channel and hit that subscribe button.
We'd love to have you join us.
Thank you for listening to the Crypto Podcast. We'll see you in the next episode.